Okay, so after a long time, I am making this video on this channel. And previous video, I have just discussed about the economic sector. In that, I have covered some topics related to macroeconomics, microeconomics, GDP, inflation, central banks' roles in our economy, and so on. These were the topics that I have controlled. But that was kind of a big picture, or you can say that it was mostly the part of a country which is not seen by many people. But the sectors which are really seen by the people, where the people have the you can say that real power to control these sectors, are the financial markets. These are the markets which are having the real power to either give a power to a company or take a power from a company. These sectors tells about the most valuable things that are currently traded in this market, which company is a valuable company, which company is on profit, which company has a high growth, and so on. These are the multiple markets which tells about a particular thing. And this financial markets include many other markets. So for example, there are bond markets. Let me just list here: bond markets, crypto markets, and we have some markets like future and derivatives, and we have commodity market, forex, and stock market. So I will be covering all these markets in my video one by one, and I will tell you that I will just give you a big basic overview that what are these markets and how they are working in this field. I'm gonna just give you that particular thing, and by that we can understood that how these markets operate in this particular country. So let me start with the stock market. So a very basic definition of stock market is that, let's suppose, there is an investor, there is a company. If this company wants money and this investor wants money in return in form of like interest or any other thing. So if this company wants some money, so either he can start a funding round or he can ask to this investor. Not there is not only one investor, there are millions of investors present in the stock market. So this company would ask to give money from this investors, and how they are gonna do this? In simple terms, they will buy the company's equity. In simple terms, let's suppose this is a circle. This is a company, let's suppose, and it has multiple parts. Each part is a equity held by a investor. Let's suppose 20, 20, 20, 20, and 20. These are the multiple investors which are holding the equity. But still, the company wants some other funds to either raise their branches or to expand in multiple cities, states, etc. There can be multiple factors by which a company can be wanting this. So the company ask money from these investor. In return, this company will give their equity. That means when they are going to give the share to the investors, they all are gonna do dilution of their equity. That means, let's suppose, after the company has given the shares, now each person is holding 10% of it. But now there is one more thing: 10, 10, 10, 10, and 10. There is another percentage of 10 which is holded by the public. Now, This is the kind of equity sharing that would be helping. There would be more, like, I know that this is not 100%, but I'm just giving you an example that how it will be working. So this was the particular thing that I wanted to share with you. And now, if I explain more about the stock markets, if you are very beginner to the stock markets, let's take a story. Let's take a person named Raja. So let's start with the story that this is Raja, and Raja has just entered a stock market by listening some news and some theories about stock market from his friends that money can be doubled in minutes, in seconds. So this Raja was very curious that what is this stock markets? How does they are working? How are many big giant companies are listed on these stock markets? So on. So when he got to understand the stock markets, he just directly go on to the multiple forex, sorry, not forex, multiple stock exchanges. Let's say like BSC, NSC, National Stock Exchange, Bombay Stock Exchange. He saw multiple companies that are listed there. Those are the top prime companies of the country. But then, for trading these stocks, there should be a demat account, and there should be a mode of exchange by which stocks can be traded, which is done by the broker. So then he searched for a broker, and for me, Zerodha is the best broker for trading on these stock markets. So he just visited the Zerodha account, and then he saw a live charts which were displaying live values, the live prices of the stocks every second, which was changing. He saw that he can view the stock prices of multiple months. It was like, let's say, this is the kind of chart that he was seeing on the his dashboard, and there was price listed like this. There was timeline, and here was the option of buy sell, and so on. It was a really great and detailed chart about a company's stock. And then he got to analyze that if he wants to invest the money there, that should be invested in the stock market, because stock market is not like that you can just have money and you are just investing in random companies. No, it is done purely logically, statistically, and with deep information. Only then you can invest in stock market, or else you are just wasting your money, and you are just uh, seeing it as a betting app. But no, stock market is not a satta bazaar. It's a real thing that is driven by pure logistics, market news, some companies' values, some companies' returns, and so on. There are multiple factors by which these stock markets are uh, driven. So Raja saw the chart. Raja now understand what is the basics of these charts. How are companies listed? What are the top prime companies? Now the starting of the investing. Now Raja wants to start the investing, and he started with searching some companies which are having real great growth. And what I mean by this real great growth, let's see what does this growth means. What is this growth? So growth simply means that I'm just telling a definition which is really great, and this growth simply means that is the company offering something such valuable, something so much valuable that will still be valued in future. Let's suppose if a company is selling an object named A. This object A has a really high impact and high demand in 2025, and this is sold by a company X. But does this object A will have the same amount of demand or supply in 2026? 7, let's say about after 2 years or after 2030, let's assume this. If this will have a same demand and value after 5 years or more, then this company X is valuable. Because I tell you that one thing, my whole ideology is about long term investment. I just believe that long term investment is the best investment, just because we are just putting a large amount of money on long term investing, because we do not see current charts and so on. We analyze the whole company and we just bet on the company's future, because we see some value in the company offerings. If we see some values in the company's current offerings, and that is that is the particular thing that is driving us for the long investment. And long investment is just done with pure understandings, understanding of the financial markets, understanding of the company's health, understanding of the company's response in the social media and this live world. On multiple factors, these long term investments are done. So when someone is investing for long term, this is the thing that will gonna give him some great returns over past years. So uh, we were just searching that how this Raja was gonna invest in this particular sector. So Raja searched for some companies, and then he found out some really great companies which were showing a great impact in future and the current year. So let's suppose the timeline for the long term investment would be 5 years, we are assuming, because that is how a long term investment would be working. So Raja analyzed some 5 to 6 companies, and he invested a large amount of money in it. Let's suppose the money was 10 cr in rupees. 10 cr invested in this 5 to 6 companies. Now we are gonna see what were those companies factors were that really influenced Raja to invest in these companies. So let's suppose factor number 1. You you know what is the kind of moat. Let's suppose you have seen in the picture that this is the house which is placed on some basic land area, and around this is not in pictures, you would not see the house. There were like castles and big kings houses. Around that there is a field of water which is surrounded by this house. This is called the moat. And just like this, assume that this is a company, and this moat is the company's value. This is company's face. This is company's growth. This is company's real assets, and so on. This moat will tell that will this company be really great in af- in later 4 to 5 years. That means Raja has to now search for the moat. That means first is the moat analysis. So what are the things that are come in this moat analysis? Raja would see that brand strength. Does this company have a brand so strong that people will pay more for it? That I told you in this particular part. Is this company has a strong object that is still be valued after 4 to 5 years? That is the thing that Raja analyzes, and this comes in the moat analysis. Second is network effect. Does the service get better as more people use it? In simple terms, if let's suppose in future years the population will still grow, more and more people will come online and more people will use the product. So will the service of the product is better as more people use it? Because as you know that whenever companies sales and other things are increases, so the company decrease the quality of the service provided to the user. So does the company is doing this particular thing? Because if a service is not given to the user properly, then that means user feedback will be you can say that offended. And if user is not satisfied with the company, that means a chain reaction will go on that will decrease the value of the company. So Raja analyzed this network effect. And the third thing is the company betting on future? What I mean by that is the company showing that in future they will be gonna launching some tech products that are gonna kind of change the industry or revolutionize the industry. Are the companies showing any type of future techs? So these were the some things that are come in the moat analysis. In simple terms, we are just seeing that what company is doing. Is the company faking or is the company real? So this is what we are seeing. Second. So now let's move to method 2 that Raja has used, and I will be writing it here. The method 2 was the financial health check. It was it's just simply that what profits the company is earning, what was the price to earning ratio, and is the company in depth or not. And like these are the multiple factors. Let's say he has seen that, he has checked that is the company is having consistent profits, or is the company is having any loans. That is the most important thing, because every company has a loan. But the thing is that is the company has loan which is greater than their company's value? If that is the problem, then it means the company is on kind of a really large debt which may cannot be paid in future. So there is a small risk of that. So he avoided those companies which are on the high debt. The second thing was return on equity. In simple terms, that how well the company use its own money to make more profits. It was like return of equity like 15 to 20% told him that management was efficient and smart. It was like that. It is called as return on equity. ROE. ROE. This is the definition. So now these are the multiple factors that helped Raja to check the financial health of a company. The third method was the management quality. So management quality simply means that does the owner of the company, owner, CEO, founder, whatever you say, does the owner of the company having the same kind of vision that he is showing in the public? Let's suppose if a person is showing in a public that he would be investing in this particular sector, so on and that, but in real he is not investing in those sector. That means he's just faking his identity in the public. If he is faking his identity in the public, that means his company's future is now his company's future is just kind of is is company's future that he is betting on maybe fake. So he has avoided those companies in which the founders were faking or the founders show no interest in their companies. He also checked that does the founders owns a large chunk of stocks by themselves. Because if they are not holding any stocks of their own company, that simply means that they don't have any vision of their company. They don't want or they don't see their company succeeding in future. So that is why they have not invested in this is simple. So these are the kind of the management quality check that Raja has seen, like public news, the companies, and so on. These are the multiple things that Raja has checked. So Okay, there is one more thing which is known as the price tag, the valuation. So what does this mean? It simply means that price to earning ratio refers to that how expensive the stock is compared to its profits. Let's suppose the company is earning less profits but the stock value is still high. Then simply means that they have just overvalued the stock. That is why whenever you buy any kind of, let's take example of any fruit, you see that in particular season or particular days the value of that particular fruit is increased by either doubled or it is a higher value. Then you just ignore that particular fruit because its value is not that high, it is simply overvalued. So that is the same thing with these stocks. If the stocks values are really high compared to the company's profit, then that means that the current time is not the right time to buy. He may he may hold on for some months after the stock price is decreased, but still he has to stop it. So these were some factors that helped Raja to invest in a particular company. And also, if you invest in big companies, the risk of failing is really small because the company itself is so big then it cannot fail so easily. And there are really great people working in that company. That is why it has made such a big company. So in big companies, this is kind of less riskier. But the starting small cap companies that are just recently opened and they are not having any sustainable growth, those are some risky companies that may go bankrupt or shut down anytime. So whenever you invest, try to invest in big companies. But if you are still investing in small cap companies, just understand about some fundamentals and just read some companies details. Then after only after it you can invest in that company. So that is how Raja investors invested in the stock market. And stock market, this is the basic overview of the stock market. But when you go in real stock markets and you explore these things, you are getting so much new things. You are just seeing so many particular companies, or you will understand that how these stock markets are working, like based on some news, companies reports, companies CEO interviews, the company's stock prices goes up downs. It's kind of a chain reaction. If a certain news holds in the market, if some great big bears or buller bull people who start to invest or sell the stock price will go down, and this will create a kind of fear in the investors that this stock is crashing. Then everyone will start doing panic selling. Panic selling, that simply means a chain reaction that will go on till the stock price is crashed. This happens in many companies, but still there are many bullish people sitting in the company. So they put a lot of money to make the stock stable. And there are many other things that you can understand about stock market. Let's suppose you can also understand that what type of chart patterns are made when a company's stock price is going up or down. This is known as kind of technical analysis, in which a person is not analyzing the company's reports, balance sheets, and CEO's response interviews. He is just simply betting on the chart patterns. He is just seeing that what type of chart patterns are made based on which he can easily trade on the stock market. And there are some other things that are like, you have to first figure out that what type of investment you want to do. There are multiple type of stock tradings that can be done: scalp trading, intraday trading, long term investing, short term investing, and so on. Also, if you don't want to understand these stock markets, you can just put your money in the mutual funds. They will automatically invest your money into stock market. But that is for the people who are not interested in the stock markets. But if someone is interested in stock market, then he should understand these, because you have to also understand that based on some global news, particular stocks are affected. And it's really great that how these multiple things are linked with each other, just like Russia Ukraine war crisis that shocked the whole world. Because let's suppose it's taking an example of Suzuki company in our India. They just made these scooters like Access Suzuki. In that, there is a part which is manufactured only on the Ukraine. Since the Ukraine war started, the part export is stopped. That means the company is facing problem in manufacturing of that part, and this affects the new models of the companies. Like there was new Access model which was delayed. It was kind of like that, which was done just because of the Ukraine war crisis. So stock market just tell us that how this world is linked. And if you are just understanding the stock market, that means you will still earn a lot of money, because exploration is the main key advantage of some investors which end up making them money. So if you are exploring these markets, then it's just like a great ocean which is so deep. The more you go, the more you will find. And this was a basic overview of the stock market. So if you understand a small thing or any particular topic, it would be really helpful for me. I was just explaining this topic because I just wanted to share some information to you. And yeah, that's it. I guess we should end this video. And the next part, I will be covering about the other markets like crypto, future derivative, and so on. So this was the basic overview of the stock market, and I've tried my best that I can express to you all. And that's it, guys. Thank you for watching this video. Let's end this, because I also have to see the various markets that are currently in the India. And let's end this video. Thank you.